Truth is ever to be found in simplicity and not in the multiplicity and confusion of things. Sir Isaac Newton. My friends, we focus on simplicity. We talk about it. It is our motto. Simplicity, simplicity, simplicity. We go over it every day. If you deal with complicated charts that are difficult to make decisions when looking at, when reviewing, you are missing out on so much of the wonderful things in life. That's why I could never be a day trader trying to scrape up a few pennies a day, sitting at those charts all day long, trying to find complicated things occurring instead of following trends. And of course, our weekly vertical crossover is the king of all of the movements that we jump into. When you see those weekly vertical crossovers on the charts, we've had 13 of them this year, 12 have worked, 90+ success rate with the weekly vertical crossovers. The 2-day recrosses are also potentially jumping in points. Now again, it can get more complicated with them. The smaller the chart, the smaller the wave, the less likely things will move in your direction. But the real sea changes occur when we see those weekly vertical crossovers. Fear and greed running through the market. Investor sentiment, that's what they show you. We have a great training for you today. It is do what works. We want you to have it. If you're a subscriber at chartingwealth.com, you will get it. It's free to subscribe. Go to chartingwealth.com, sign up, put in your name, email address. That list is never spammed. It is never sold. It is just ours to share valuable information with you. Now, let's jump into these charts. Thank you for all the book orders, all the Patreon support. What do we see going on? We see everything up for the day but gold. Let's jump into the S&P first, up 0.35% for the day. Now, when we look, what do we see? We see a nice, clean trend line that's moving up, up, up. That's beautiful. Price percent oscillator moving up, derivative oscillator gaining upward momentum, higher high, candle body is higher than the prior week. That's great. 2-day chart. This is where we see some problem occurring. Now, we had something like that happen before, where basically the market had gone up, digested its gains, and then continued back in the same direction. The weekly is still strong. 2-day showing weakness. Sideways slide on the price percent oscillator, derivative oscillator into its third devolvement candle on the derivative oscillator. We have a red open box spinning top. Now, that's not a down candle, but it's a slow down and shows indecision. We do have a warning bell where we have lost the, now again, we can, even if we try to redraw that a little bit using the latest strong up candle, still are just not capturing that. We're seeing where prices moved there just on a little bit below the 2-day trend line. So we are having some loss there. We'll continue to watch and see. It was up for the day, but again, we're showing some weakness. So you just pay attention to that. Pay particular attention if you're in this trade with that 2-day recross. Jumping in point somewhere around the 326.50 mark. How high has it gone? Up to 339.72. Yes, that's the highest, 339.72. That's nice. Look how close the 2-day is to crossing over. You see that 2-day crossover going down. Might be a good point for you to pull if you're still violating the 2-day trend line. You're still going to be well above the weekly. You don't have to wait for it to drop in order to take it, particularly since you're in a 2-day recross. Not as strong as a weekly vertical crossover. What do we see on the 4-hour, well, the half-day, 195-minute chart? Still negative, price percent oscillator flat and negative, derivative oscillator negative, losing downward momentum. But again, we see for the last day and a half up movement, actually moving up that 2-day trend line. That's good. So again, if you start seeing devolution in the price as far as where things are going on the 2-day trend line, reverting back to the half-day trend line, that's another warning sign. You're to be noting these things, practicing these things, learning from them, making sure you're taking the lessons that you learn to heart. If you don't write it down, it didn't happen. It might as well not have happened. Very important to write stuff down and learn from it. That's why you keep a notebook beside you when you listen to these daily reviews and the weekly review and forecast. You fill out your weekly market worksheet. Every day your daily worksheet and your trade worksheet when you're in a trade. Why? Because that gives you the ability to follow Pearson's law, like our training yesterday said. That you will see gains when you write things down. You'll see exponential gains when you write them down and report them. That is, you go over them and study them. You want to supercharge your training? Fill out those trade worksheets, daily market worksheets, weekly market worksheets. You might say, where are they? They're in your show notes every single day, whether you're listening to the podcast, you're getting the email, you're looking at us on YouTube, and please subscribe there. Also, if you're listening to us, watching us on YouTube, subscribe there. You'll see in the show notes printable PDFs, and you can print out your own daily market and weekly market and trade worksheets. Now, let's move from the S&P to the QQQ. That's the Nasdaq 100, the tech stocks. What do we see going on there? Well, let's adjust, if we can, our weekly trend line a little bit. We're close to connecting 3 candles there, getting closer. Now that that's in it, we see the price percent oscillator actually moving up at a little steeper angle. That's good. Derivative oscillator gaining some momentum from this week, up 0.69% for the day. Look at this latest 2-day candle, higher high, nice green up candle, higher, the box higher than the prior. And we told you to watch for it. We told you to watch for it. What do you see happening? You have a 2-day recross, which we have already drawn in there for you. Did you jump in at the end of the day, somewhere around the 278 mark, something like that? Did you jump in on that 2-day recross? You didn't have to. Just suggested you might want to look at it since the weekly's still going up. We talked about checking it out toward the end of the day. Who did it? Are you using your trade worksheet, putting down your thoughts, learning from it? I hope so. So we see the 2-day chart moving up, 2-day recross, derivative oscillator gaining upward momentum. What do we see on the half-day chart? We see it again pulling away from the red signal line, derivative oscillator gaining a little bit of momentum. And we see a higher high, candle higher, and the wick higher. Good to see. We'll monitor the Nasdaq 100, see what it does for you over the course of the next week. Are you drawing in your profit and loss bands, keeping up with that in case it doesn't go the direction you want it to go in so you can pull the trade and minimize losses? I hope so. I hope so. Now, let's go to 20-year bonds, up for the day 0.60%. Now, we see the price percent oscillator losing some of that downward momentum. Derivative oscillator has gone negative on the weekly chart. Second week of down movement, but look, we haven't reached a lower low at this point, but price percent oscillator still moving down, pairing off some of that downward movement. Derivative oscillator gone negative, so keep that in mind as you look at the 2-day chart where the price percent oscillator is going flat, still heading down a little bit, but flattening out. Derivative oscillator has stopped its downward movement. Looks like it pulled back a little bit. We have a green candle that has formed, a green up candle after a slowdown in the down movement, piercing the 2-day trend line. Now remember, we had that 2-day crossover that jumped us in, so be very careful. Again, 2-day crossover, recross is not as good as our weekly vertical crossover, so again, keep your eye on that. You can take your profit when it makes sense if you have not already. You've done okay at this point. Just watch. Look at the 4-hour chart. We've got an uptrend there since it crossed over going up back on the morning of the 20th. That was on Thursday. So you've got 2 days of up movement. Keep your eye on that. You can still be in, just be careful and learn from this. When you see a piercing of the 2-day trend line, what does that tell you in down moves? Are you keeping up with those lessons? I hope so. Now we're going to move to our last chart. That is gold, down for the day 0.80%. what's going on with gold. When we look at the weekly chart, remember we had that weekly vertical crossover all the way back on the first week in July. The week ending then, it ended early because of the 4th of July weekend. We had green up candles all the way until we had a slowdown at the end of last week, the 14th of August. Sorry, almost went ahead there into the future. What do we see going on at the end of this week? We have a red spinning, well, we almost have a doji, and it's a solid one as opposed to an open box. We do have a wick on top and a wick on the bottom, but again, we see devolving of the price percent oscillator and the derivative oscillator going into it, passing through its second week of down movement. Now we leave the weekly, which is still positive, go to the 2-day. We had that 2-day crossover going down, which of course, if you were still in gold, should have pulled you out if you hadn't already gotten out after your 2-day trend line was violated along with your weekly. We're redrawing that trend line now, or trying to do so. And again, we'll continue to monitor gold and see which way it goes. What does this give you an opportunity to do with that 2-day crossover going down? Maybe we'll have a recross in the future. Once gold settles out, perhaps it'll pop up again and give you another jumping in point for a nice play. Let's look at the half-day chart. We see the price percent oscillator still going down, derivative oscillator gaining downward momentum. And again, we can try, oh no, I just messed up that line. There we go, trying to find our 4-hour. And we're going to redraw that a little bit, see how many. Again, we like to connect 3 candles if we can. Now I'm going to have to go back. I grabbed the wrong line there. We're going to readjust that. Make sure, that's how easy it is. If you do happen to make a mistake, for those of you who are listening and not watching, I pulled the wrong trend line away. Well, I just redrew it. So again, we'll keep our eye on gold and we'll see what's happening. See if we have a recross on that 2-day anytime in the near future. If not, at some point it will pull the weekly over. But folks, that's where we are as we end the day. Just for the Bitcoin fanatics out there, we hadn't looked at Bitcoin in a couple of days. Let's check it out. Down for the day, 0.95%. But look at the week. It went higher. It's a smaller candle than we've seen in the last 4 weeks, but Bitcoin did hit a higher high. Price percent oscillator still positive, losing a little bit of momentum, but still going up quite nicely. Derivative oscillator gaining upward momentum. 2-day chart, we can see where this latest is the first red down candle. Well, we saw one 3 weeks ago. But it was just a little short one for a while, and then things went up the following 2 weeks. Check this one out. I don't have a crossover yet on the 2-day. That would definitely pull you out. Derivative oscillator's been losing momentum since the 7th, the 2-day candle ending the 7th of August. So keep your eye on things. Watch to see if that 2-day chart continues to lose momentum on you. What do we see on the half-day? Well, it peaked back on the 17th of August and has really just been trending down since then. So keep your eye on things over the course of this next week, particularly that 2-day chart. See if it continues to weaken or starts moving up again, and if you might have a crossover going up on that half-day chart that might give you some more hope. Folks, that's where we are as we end the day, as we end the week. And if you want to get the special 3-part training we have on options Made Simple, the Charting Wealth Way, that is available for our Patreon supporters. Patreon support levels start at $1 a day, $30 a month, and we sure appreciate you. Not only do you get that super options training, you also get the short chart training, the long chart training, the Bitcoin training. You get all sorts of great training that we do. Plus, once a month, you get the live question and answer session where you can present your questions about your practice trading and we will answer them. Also, your favorite stocks and ETFs will help you chart those so you can practice trade those, hopefully, a lot better. God bless, my friends. All the best. Thanks so much for all of your support. From the whole team here at Charting Wealth World Headquarters, God bless you.